Good morning, everybody, and welcome to today's morning coffee with Mike. I don't have coffee today. I'm actually a bit under the weather, so I'll be drinking some water today. I'm going to get uh, Instagram going. We have a few people logging in already. Welcome, everybody. Today's topic of the day, we're going to be talking about trading smart in 2024, comprehensive beginners workshop. So, as we go through this, I'd like for you to interact and post your questions into the chat as we go. I'm just going to attempt to get Instagram going here before we begin, and see if it works. See if it works. I'm just going to come over here to Instagram. Looks like I'm already live on Instagram. So if you can see me over on Instagram, just say hello. And everywhere else that you happen to be watching. See a bunch of people logging in. Welcome, everybody. All right, so let's dive into the content. So, first part of knowing when and how to buy. You have to know when to buy, what to buy, how much to buy. You also have to know when to sell and how much to sell. That's the absolute basics of trading. And so sometimes you'll come out with a win, sometimes you might come out with a loss, but here's the main idea. You're going to have a tug of war on either side of the trade. So for every win you have, that's going to add to the winners. That's going to add to the winning side. For every loss that you have, you're going to have losses on that side. Pretty simple so far, right? So there's many ways for us to get wins to win the tug of war. And I want to point out that you don't be fooled into thinking that there's only one way to win, that you have to have massive wins and extremely small losses in order to win the tug of war, or that you need to have so many wins and very few losses. There's lots of ways to slice and dice this up. I'll share what I do to win this tug of war, but at the end of the day, the thing that's going to win the tug of war for your equity curve is having more wins, right? Like more wins, a more quantity, higher percentages on the winning side and lower on the losing side. Lots of ways to do this, but don't be fooled into thinking that there's just one way to do it. That's the main point here. So, the common problems that people face, especially in the early stages, and I've experienced all these. Lack of focus. So jumping from one system to another system to another system to another system, also system hopping. If your trades aren't working, oh well, it must be that the system's wrong, or maybe I'm not executing this system properly. Let me go try something else. And before you ever master one particular style, you end up shifting gears into something else. And maybe that works for a little while, and then we run into some more adversity, and then we switch over to something else. We never really master any one thing. Now, that's one of the biggest problems there. So, lack of focus and system hopping, very closely related, because if you're not focused on one particular system, one particular setup, then it'll be very difficult for you to master any one thing. Then hubris. What is hubris? Hubris is the idea that don't need anybody's help. I'm just going to do this all on my own. I know better. I've been successful in my career. I've been successful in many other things. I'm not going to bother listening to uh, anyone else's advice, or thinking that I'm better than somebody else. That is hubris, and that is one of the things that I would say uh, causes most people to screw up, and it caused me to screw up for a number of years because I lacked respect for others. I lacked respect for myself as a consequence, and because I wasn't willing to get advice and uh, see things from other perspectives. that held me back for a very long time. So look out for hubris. But in general, the solution to these kind of problems is very, very simple. The answer is to really turn to God. Turn to God, pray for wisdom, pray for guidance, and then take action on those things. It's not going to be anything that I say, anything else that somebody else on social media says. It might be a combination of those things because God speaks through us. But if we pray and feel guidance towards one particular style, system, action, then it's on us to go and take those actions. So once you do this, then find what resonates with you. Find someone who has had the kind of success that you're looking for and learn all that you can from them. That's basically what led me toward success after many years of failure. I eventually found people like William O'Neill, Mark Minervini, studied Jesse Livermore's work, studied Nicholas Darvis's work, studied Van Tharp's. And as I went down that path and I'm learning bits and pieces from each person along the way, then that's part of how I was finally able to find success. But it wasn't all the system hopping that we talked about earlier, digging a field full of half dug holes. It had to do with focus, and part of the focus came from wisdom, guidance directed by God, and dropping the hubris, understanding that I needed help and seeking that help and allowing others to help me. So that's what we could do here at this step. So I'll share with you the things that I do that help me win this tug of war. I see some friends hopping on. Well, welcome. All right. So, step one, check the landscape. The first thing that I'll do when I'm trying to see, well, how much should I put on or any of these things is to check the landscape because right now, maybe it's a great time to put on trades. Maybe it's a great time to sit in cash. Maybe it's time to start putting on size. Maybe it's time to play conservative. The only way that I'm going to know that. The only way that I know to figure that out is to check the landscape. And so, what does that even mean? Here's how I go about checking the landscape. And I've broken it up into these three vectors here, and I have it with this Venn diagram. And this is outlined in my book, The Trading Mind Wheel, but I'll explain it to you here. So, what is the market's mood, how I like to call it, right? Because uh, so much of trading has to do with psychology and mindset. So the general market, the way that I'm looking at the general market is as follows. I'm looking at the major indexes and I'm looking at them across time frames. So I'm looking at the S&P 500, the Nasdaq, the Russell 2000, the New York Stock Exchange, and the Dow, and I'm getting this big perspective of those major indexes because that's showing me what the aggregate is doing. And I'm looking at them not just on daily charts, but also on weekly charts and also on monthly charts. So that way I'm getting from the forest, the trees, and then down into the individual leaves and seeing the earliest signs of change from that global perspective in the market. I'm also looking at uh, the distribution day count. How many distribution days have there been over the past 10 days and over the past 25 days? Now, for those of you that don't know what a distribution day is, it's a down day on any one of the indexes of at least 0.2% or more on heavier volume than the day immediately before it. How did I learn about this? I learned about this from William O'Neill in his book, How to Make Money in Stocks. He went back in time, he studied uh, markets going back to the 1800s, and he found that when this phenomena happened, of the distribution days, and you started to get too many of them, that would tend to cause the market to roll over and you would have a deeper correction. So that's why I track that as well. But each one of these things here, indexes, distribution day count, and then 52-week highs and lows, we'll talk about that in a second. Each one of these are just one piece of the puzzle. Not no one thing is going to take this whole diagram over here and cause it to shift. It's really all the pieces, taking a look at all of them. We don't want to get sucked into the minutia of any one thing. That's something else that caused me to stumble and fall for a very long time. So hopefully, hearing this will help you. So new 52-week highs versus new 52-week lows. That's something else that I look at. I'll look at those on both the NASDAQ and the New York Stock Exchange. And it just stands to reason that if there's more stocks that are making 52-week highs, it'll be difficult for the indexes to roll over and fall into a correction, right? Same thing if there's very few stocks making new lows. What's going to send the market lower if there's more and more stocks making new 52-week highs? Now, if we start seeing a whole lot of 52-week lows being made and very few 52-week highs, then that's something that would stand to reason. Well, how is the market going to rally if there's all these new lows being made? Very simple indicator, something that we could track every day, something that I track every day. And so it makes it easier to see when is the general market starting to get into trouble. Let me know if there's any questions here. I'm just going to take a sip of water. All right, we'll keep going. All right, so system part over here. So, well, what's the system? How do we start to think about systems? The way that I think about systems is by thinking of my universe. What's my universe? My universe is the stocks that pass my screens. So that presumes that there's a screening process, and it also presumes that you're doing this routinely and that the screens are the same week after week. If I'm just looking at random things, then it's not going to be very much of a universe. Well, what I want to look at are the certain stocks or certain elements, certain fundamental elements, or certain technical elements. You could really decide, well, what's going to work best for you. But to look at these screens and see, are there more stocks passing these screens? Are there less stocks passing these screens? Because if there's more stocks that are passing the screens that you're interested in, here's what's going to happen. There's more opportunity, right? More stocks passing the screens that you set up. There's more opportunity, potentially anyway. So that would be seen as a good thing for the system. Great. Maybe we're walking up the scale now. Maybe we're starting to shift from what was a red condition where we'd probably be betting a lot lower to a yellow condition where we're starting to bet a little bit heavier, and over towards a green condition where now we're putting on full sized positions. So if we're starting to see more opportunities, and let's say the general market is doing very well, consolidating constructively, then that might tell us, oh, hey, you know what? Maybe it's time to start putting on a little bit of size here. But that's not the, we wouldn't, if we just ended there, that would be folly. Next, we'd want to take a look at the trade ideas, different stocks that are setting up and the different patterns that you trade. Take a look at the overall quality and the overall performance of the stock, of the setups that you're interested in. By taking a look at those lists, by uh, taking your universe list, separating it out, seeing what stocks are setting up, and then seeing how the market is treating those setups, that's going to give you some really great information. So let's say, for example, I'll just name a couple of common setups. Let's say that you trade flat bases. Let's say that you trade a high type flag. Let's say you find a bunch of these. and let's say that they all start working very, very well. That would tell you that, hey, it's a great time for you to be in the market because not only are the stocks that you're interested in working, the types of setups that you're interested in are working. And take a look at the general market. General market is in your favor. Great. Start betting heavier. But let's say you don't find any setups. Should you be putting money to work in the market? Well, no. If you're not finding the type of setup that you're interested in, that doesn't mean that you should just start taking money and throwing it in, right? If let's say that you were a farmer and you were looking for a place to plant your crops, and you're just walking down the street and you're having a tough time finding a place to plant your crops, so you're just gonna dump your seed in the middle of the road, right? And it's not a dirt road. Well, let's say that it's the middle of the highway. Would you do that? No, that's completely ridiculous, right? So why would you do that with your money? That's the idea of understanding, having clear definitions of what your setups are. We'll get into that in a little bit. Um, but understanding that you have certain setups that you're interested in and you want to track, are these setups performing well? Have I found quality versions of these setups? And that's going to help you tremendously. That's part of what's going to help you have a five-star trading year. You or watched last week's show, you know all about five-star trading years. If you haven't watched that, highly recommend that you go back and watch that. Finally, personal performance, this last quadrant down here. So, what does that mean with your personal performance? It means a few things. Consider the trades that you're holding. How are they performing? Are they in profits? Are they in loss? How long have you been holding these names? Are they continuing to move up? Are they now consolidating? What are the stocks that you're holding doing? Presumably, if you have, say you have your system and you have your setups and you have a way to grade your setups, you should be taking just the best of the best, right? If you have a way to say that this is a quality setup, this setup is trash, you wouldn't just be buying discriminately, right? You would indiscriminately. You would be buying just the best and you wouldn't be buying the trash. So let's assume that you have a method to say which trades are the best ones and you buy the best, and let's say that the best ones start to generate losses. Well, that's giving you some really great feedback about the overall environment. The market might be moving higher. You might be finding some trades that seem like they're quality, but they're starting to fail. That could be the tip of the spear that's telling you, hey, the market's starting to lose steam here, start to lighten up. And that's something that you're not going to find anywhere else. You're not going to find that from a newspaper. You're not going to find that from an analyst. You're not going to find that from me. You're not going to find that from anyone else. You're going to find that based on your own trades, and you'll be able to have your and develop your own edge based on this. You'll be able to trade with confidence based on this because you're getting feedback directly from the market and you're not having to rely on any other source. That's the beauty of this and learning how to read the market in this way. Here's something else. Consider the performance of your last 10 trades. How many wins did you have? How many losses did you have? How many times did you break even? That's going to tell you a lot, isn't it? That's going to tell you if your winners are starting to work a lot more. It's going to tell you if you're kind of scattered, if stocks are chopping around, maybe you're getting a lot of break even trades. How far did your trades run? Sometimes, some environments, your trades might run pretty far. For example, most recently, right, really since November, trades have run pretty far. Uh, I'm in a couple of trades that have run 30%, 40%. Some of the our members are it's Stu, one of our other coaches. He's in a trade that's up about 80%. Um, Stocks, crypto, those have all been performing extremely well. Very different story earlier in the year, though. If we were trying to hit home runs and trying to hold for these much longer gains in the beginning of the year, though we'd be very disappointed because stocks broke out and then they rolled right back over and would have generated losses. So by seeing that and adjusting, you could start to take gains at more appropriate levels. If most of your stocks, if your last 10 stocks have only run about 7%, does it make sense to hold out for the 20% gain? No, it makes sense to start selling the majority of your trade at, say, 5%. Right? If most of the trades are only generating 7%, why would you hold up at 20? Sell it at 5, sell it at 6 maybe, and then hold on to a piece to see if the rest of it continues to run because that part is going to tell you, is the condition starting to change? I hope you're getting this. If you are, type into the chat, let me know. If you have questions, please type into the chat and let me know. Gives me a chance to drink some more water here. Okay, so in a nutshell, that's how you have your market mood. And you take each one of those things, and that's going to help you figure out how heavy or how light you should be trading. It's been for me, it's been a green condition for a while. So that means betting heavier, means position sizes that can go up to 25% of my capital. So 25% capital allocation and risking a maximum of 1.5%. Most of the time, I'm not risking that much. Most of the time, I'm risking far less. It could be risking as little as 0.5%. And um, maybe we'll save that for another episode for the position size calculator. But there's ways that you can really leverage yourself without exposing yourself to lots and lots of risk. Let's continue though. Step two, place orders on all high quality trades. So this presumes that you have clear definitions, right? So here are some of the things that I look at to define my setups. And there's samples of all this inside the Trading Mind Wheel book. And I also share examples of my setups inside the Mara Premium service. But here's what I do and what you might want to follow with. Name your setup. Simple enough. You have a flat base, maybe you're trading a pullback, maybe you're trading a high type flag, maybe you're trading cup with handle or whatever it happens to be. Name the setup. After that, figure out what time frames you're going to look for this thing on. Are you going to look at weekly charts? Are you going to look at daily charts? Are you going to look at intraday charts? Where are you going to find this thing? How long should it be? If it's supposed to be 7 bars, is that 7 weekly bars? Is it 7 daily bars? Is it 7 30-minute bars? Clearly define what it is that you're looking for, the length and the depth. What's the general look and character of this thing? Is it wide and loose? Does it contract over time? How many contractions does it typically have? Does it look like a U? Is it flat? Does it look like a rectangle? How does this thing look? Where is it within a trend? For those of you that are familiar with Stan Weinstein and his work, you know that he has his own way to look at trend analysis, and he has stage one, stage two, stage three, stage four. Let me see if I could draw that for you real quick. Let's Let me see if I can bring over this chart here. So basic trend analysis, doing this on the fly. So basically, yeah, stage one Stage two, you're starting an uptrend. Stage three, you're topping. Stage four, you're back in a downtrend. And it starts over and over again. And sometimes you might transition from going from stage two into stage three. And then rather than breaking down into stage four, you continue on with the next stage two. But this here, when you're in stage two, that's when you're making the bulk of your money. So, how do you define all this stage one, stage two, stage three? Well, that too is a whole other topic that perhaps we'll get into at another time. But if you guys do have questions on any of the stuff that we've mentioned, please type it into the chat and we'll certainly get to it. But understanding where the type of setup that you're looking for falls in general trend analysis is important because sometimes you might find that you found your setup, but it's in the wrong spot on the chart. So those great. Let it go. If you'd clearly defined that, hey, I look for flat bases, but I want the stock, I want the market to be in a stage two uptrend first, then that could be very helpful for you. That's going to help you to eliminate 90% of the garbage and just focus. Remember earlier when we spoke about focus, it'll help you focus on the best of the best trades. What kind of market is required? Are you looking for shorting patterns, right? You wouldn't look for to short stocks when you're in a rip roaring bull market. Just like if you're in a bear market, uh, you're not looking for bullish setups. What kind of market type is required? What kind of quote unquote boosters are there, right? Well, what are the types of things that tend to take the setup that you're looking at from good to great? They could be things, some of the things that I look at, for example, if the relative strength line is pushing into new 52-week highs, that's something that is favorable to me. If I'm seeing that this stock is a sector leader, for me, a sector leader is stocks that are in a top performing industry group or a rapidly improving industry group. So uh, in this tool that I use called MarketSmith, there's a ranking of all the different industry groups, 1 to 197. So let's say that I find a stock that's in an industry group and the group rank was 100 last week. This week, it's 50. That's a sizable jump. So that would be something that would put it into the potential sector leaders group. And then I would go manually through the stocks that are in my universe that are also in that group and see, is this one of the leaders? And if it is, then that qualifies as a sector leader. And I want to try to have as many of those in my portfolio as I can, or at least it gives it a booster. And then finally, models. We want to have models of the types of setups that we're interested in. So that way we could go back, take a look at the setup that we're seeing now and see how closely does what we're seeing now match up to the model. How close is it? Is it even Steven or is it, you know, not really there? Because if it's not really there, if you're finding that there's a bunch of things that are wrong with it, then great, toss it to the side. It's far better for us to have this very rigorous process and end up trading less than to just be placing trades, placing trades, placing trades, hoping for the best. That's how you just spin your wheels, and it's very time consuming and very frustrating. Again, there's samples of all the types of setups that I look at, definitions, boosters, models, all that stuff, both in the Trading Mind Wheel book as well as in the Mara Premium service. Step three. Once we have steps one and step two completed, step three, the parable of the sower. So, for those of you that aren't familiar with the parable of the sower, it's in the Gospels, and Jesus talks about how there's a sower, and the sower is sowing seeds, and some of the seeds land on fertile ground, some of the seeds land on the sidewalk. Some of the seeds land on the thorns. Some of the seeds are eaten by the birds. But the ones that do land on fertile ground, those are the ones that produce good grains, good fruit, good harvest. And so our job then is to continue to sow, but to not just sow anywhere. Well, if we follow steps one and step two, we know what to sow and when to sow and how to sow. Many seeds won't make it for a variety of reasons. Some of them will make it and produce gains. Some might be small, some might be medium, some might be large, some might be absolutely enormous. When you're taking your dollars, which are the seeds, and you're putting them into the high quality trade that you found. You don't know if it's going to generate 10%, 50%, 100%, or generate a loss. The only thing that you know is that you have a clearly defined process that if you follow this process will at the end of the day help you win that tug of war that we spoke about at the beginning of this episode. So the way to sow well is to have rules, right? I'm pointing over here like you could see my finger. The way to sow well is to have rules, systems, and guidelines. That's what's going to help you sow well. Know what is at risk. Design systems so that no single risk is going to condemn your whole harvest. So that's why when we were looking at that Venn diagram, well, what's the market mood? Is it red, yellow, green? That's telling me how much I should be putting on. But even during the biggest portion, even during that green condition, I'm not taking my entire account and plowing it into one trade all at once. That would just be silly. Then I'm risking my entire harvest. You don't want to do that. Trust me, before I had experience and learned this kind of stuff, those are the types of dumb mistakes that I would do, and I learned things the hard way. Learn from these mistakes. Don't take all of your money and just plow it into a single idea. Because even if that single idea does end up tripling, let's say, right, it's creating a bad habit. And the bad habit could be that, well, now you know that, oh, well, if I put all my money into one thing, then maybe I'll have a gigantic harvest. But you could also have an event where you lose the whole thing. You don't want to be in a position where you could potentially lose everything that you have or lose enough where it's going to cause you significant damage. You need to learn how to manage risk. You need to know when to harvest. So let's say that you have trades that are moving up 10%, 20%, 30%. Feels great, doesn't it? But when should you start to sell? When should you sell the whole thing? When should you reap your harvest? Because if you don't take your harvest, eventually it's going to roll over. You don't want to hold anything forever. You might hold portions of it for very long periods of time. And very long periods of time could be months, could be years, depending on who you are. But there is a time to harvest, at least some. You have to define when those periods are. Otherwise, the fruit on the trees will fall and may become rotten. So, if you'd like to work with me, here's what you could do. You could join Mara Premium. Go to marawealth.com/premium, and uh, we have an offer for New Year's. And the offer is this: sign up for a year and you're going to get an extra 2 months free. So that goes for anybody. If you're watching this and let's say that you're a current monthly subscriber, you could upgrade now to an annual and get an extra 2 months free. Just renew your your subscription now. For everybody else that's coming on, that's brand new, hey, sign up, you get 2 extra months free. Not bad, right? 14 months. Have that commitment so that way you could really learn and grow. 90-day money back guarantee for those of you that are on the fence, like, oh, I don't know if this is for me. 90-day money back guarantee. But that's not to say that this is a buyer's remorse clause. If you're putting in lots of effort and you feel that you're not getting your money's worth, then I'd rather refund you your money and allow you to go off and succeed somewhere else. And if you saw the episode from last week, the the goal that I have for 2024, one of the goals that I have for 2024 is to help 100,000 people have five-star trading years. Well, how am I going to do that if people are coming in and let's say that you come in and you're not satisfied? Am I helping you have a five-star year? No, better to give you the refund and help you find somebody else that can help you. But that's hasn't been the case so far. Um, let's say that you have a lot of things that you hear from me and that you like, but maybe my style isn't quite the style that's going to help you. Let's say that my style, I like to swing trade, but let's say that you're a long-term investor, like you prefer Warren Buffett style, but you like some of all the things that I have to say. We have a growing network. There's a lot of people that I talk to, people that are longer term, people that are shorter term, people that day trade, people that trade forex, people that trade crypto, people that trade all sorts of things. So with that, I'd love to hear from you what you trade and try to help put you with somebody that can help you along your journey if it's not me. Well, we all need some help. We all need some guidance. We all need someone that can help us show the way, and that's going to help you have the five-star year. So if my style isn't what you're looking for, chances are pretty high that I know someone that can help you. So reach out to me, share your story, and we'll help point you in the right direction. And see that we're already about 10 minutes over. So I want to say thank you so much for being a part of this. It was great spending some time with you today. I hope that you have a very happy new year, and I'll talk to you again real soon. Take care. Much love. Peace out, everybody.